Can I actually defer my taxes for a whole year without messing everything up? Tax deferral is a strategy that lets you delay paying taxes on your income or investments until a later date. In simple terms, it's like pushing your tax bill into the future. This can be super appealing because it allows you to use that money for other things now, like investing or spending. Many people find it a popular strategy for growing their wealth over time. Deferring taxes isn't all sunshine and rainbows. One big concern is that tax rates might go up in the future. If that happens, you could end up paying more in taxes later than you would have if you paid them now. Then there are withdrawal rules to consider. For example, if you take money out of a retirement account too early, you might face penalties. Life can be unpredictable, too. You might need that money sooner than expected for an emergency or a big purchase. Let's talk about some specific examples of tax-deferred accounts. A 401k is a common one, especially if your employer offers it. You contribute pre-tax dollars, which means you don't pay income tax on that money until you withdraw it in retirement. IRAs, or individual retirement accounts, work similarly. You can contribute to them with pre-tax dollars, and the money grows tax-deferred. There are contribution limits, though, and they're adjusted annually. Understanding these limits and how much you can contribute is key. These accounts have huge growth potential. Since you're not paying taxes on the contributions or the investment gains until later, your money can grow faster. It's like having a bigger snowball rolling down a hill, gathering more snow, or in this case, more money. But remember, the government will eventually want its share. The critical balance is deciding when to defer taxes and when to pay them. You want to defer when tax rates are low and pay when they're high. But it's hard to predict what tax rates will be like in 10 or 20 years. Making an informed decision requires thinking about your current financial situation, your future goals, and how taxes might change. To make the most of tax deferral, consider your overall financial plan. Are you maximizing your contributions to tax-deferred accounts? Are you thinking about when you'll need the money? These are important questions to ask. It's not just about deferring taxes, it's about using the tax system to your advantage. In conclusion, tax deferral can be a powerful tool for growing your wealth, but it's not without its complexities. Understanding the benefits and potential pitfalls is crucial. It's about making informed decisions that align with your financial goals. If you've had experiences with tax deferral, good or bad, share them with us in the comments. It's always helpful to hear real-life stories. And if you want more tips on financial planning, consider subscribing. We'll be sharing more insights to help you make the most of your money.